It's almost 1 p.m. in Sydney, 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian shares extending the rebound on Wall Street after signs of resilience in the US labour market ease recession fears. China's consumer prices rise more than expected, offering hope of a recovery in domestic demand that's been weighing on growth. Plus, Japan slows as chip factories suspend operations, with government issuing its first ever warning for a megaquake. Well, let's get a look at how markets are faring. Looks like a risk-on tone to end the week. Avril Hong's got a closer look. Avril.
Yeah, we're seeing that market rebound, Paul, but we have also seen this movie before, just a day ago, where stocks started the day pretty much mixed, and then those gains came through as the session progressed. They eventually failed to clock any gains, so let's see if these gains hold. But of course, this is coming against the backdrop of what we got from the US initial jobless claims, that weekly data point that showed the decline the most in almost a year. So that's easing some of these recession fears. And certainly that is what drove the Wall Street rally overnight. We saw like a 2.3% gain on the S&P 500. Futures are pointing to further gains at the open. But interesting also how even with these gains that we're seeing across the board in Japan, notable, it's coming against the backdrop of this weakness that we're seeing in the Japanese currency. And it reminds you that when it comes to dollar yen, what the Fed does is also important. Maybe those recalibrated bets of just how much easing we're going to get from the central bank. Now, let's flip the board and take a closer look at what we're seeing in Chinese bonds, because it's nothing short of a monster rally that we've been seeing in this past year. And this is really bringing up the jitters from Chinese authorities in trying to stem what they think is a bit of a bubble. And we're hearing how they seem to be ramping up these measures to cool the rally. And we're hearing from traders in the past day or so saying that some of these big banks have been selling the 7-year notes. Local authorities seem to also have suspended bond trading for some of the lenders. We're seeing a sell-off today in Chinese bonds. Flip the board again, because we did get data. Chinese inflation on the CPI front, it is better than expected and an improvement from the prior month. But if you look under the hood, it is a bit more concerning because it is still a weak picture, and core CPI also fell. So this is something that some of our strategists have actually flagged as emboldening China bond bulls potentially. Paul.
All right, thanks, Avril. Let's get a bit more on that warmer than expected Chinese inflation data. Bloomberg economist David Chu is joining us now. So, David, how do we interpret that data? What's the outlook on inflation for the rest of the year?
Okay, first of all, if you look at the headline numbers, you would think that the data improved, especially it was higher than the expectation. But if you look at the details of the data set, you would see that it was mainly the food, or in the easier word, it was mainly the pork was supporting the CPI. And also, it was the travel also contributed to the upside on the month-on-month basis, which is more seasonal. And as we just aside, that if you look at the core inflation, it was still lower than last month reading. So it tells us that the domestic demand is still weak, and unless we have some the way to boost the domestic consumption easily or soon, we don't think the inflation, the CPI inflation, to rebound significantly in the rest of the year.
Yeah, so what are the reasons behind this ongoing weakness in domestic demand?
Yeah, as I said, it was mainly the slack consumption behind the move. Actually, we have a model decomposing China's inflation, and we found that it was the household consumption that dragging the CPI. On the other hand, the monetary policy was supportive to the upside. So all in all speaking, as I said, it is the key to boost the consumption.
So what does this mean for the PBOC? Could we expect to see some more easing off the back of this data?
Not soon, because the PBOC just cut the rate in July. Actually, it was only 2 weeks ago. So we do not expect the PBOC to cut rate again soon. So I think the PBOC would still look at the Federal Reserve's move before make another decision. Now we are expecting more rate cuts by the Federal Reserve, and our baseline for the PBOC is still to have another 10 BP cut in the rest of the year. But if the Federal Reserve cut more aggressively, for example, if the Fed cuts 100 bips in the rest of the year, we see the chance for the PBOC to double the cut to 20 bips in the rest of the year, which would bring the total cut in this year to 40 bips. So that is all. All in all speaking, we still expect the PBOC to do more easing, but it's unlikely to be aggressive.
All right, Bloomberg economist David Chu there. Joining us now is Rachana Mehta, co-head of regional fixed income at Maybank Asset Management. And Rachana, I want to start, if we can, in China, just reflecting on that CPI data. Some headline strength, perhaps masking some ongoing weakness there. David saying that, don't expect stimulus anytime soon from the PBOC. Do you feel that the pressure's starting to mount, though, for them to do something?
I definitely think that because the consumption demand is weak, so I do expect actually PBOC to do more easing towards consumption, giving them tax breaks. And I do expect them to cut rates, as David mentioned. Maybe sometime, I think after September, they will definitely cut about 10 to 15 basis points. So I do believe that though China is going in the right direction, but they need to do more, especially to ease the property market and the consumption demand. I think once that both stabilizes, you can see a growth on a stronger footing over 2025.
As you're speaking there, we can see the yields on Chinese bonds and, that rally not really pausing for breath at the moment. Is the PBOC doing enough to stem that rally in bonds? Do you expect any more action on that front?
I think PBOC is caught because they don't want bond to rally too much, because actually they do want to make sure the currency is stable. Recently, they've been fixing weaker currency. So they don't want to have a situation where the currency starts weakening a lot and then the bond sells off. So I think they're trying to have a balance between the currency and the rate rally. And that's why they've been telling state banks and others, like, be careful, don't go a lot of long duration, because I think as of now, I think they've started fixing the renminbi weaker, if you look at every day. So I think given that what's happening in the US and rest of the world, as the data is slowing and as more and more cuts are expected by the Fed, I think PBOC doesn't mind let the currency weaken slowly over the next 3 months. So I think they're trying to put a balance between the monetary easing and the currency weakness. And that is what I think they're trying to tell the market that, don't depend on the bond rally too much. Be careful, because you remember last year we had the regional banking crisis where people are running a big mismatch on the asset liability duration, where everybody was buying 30-year bonds and suddenly the rates started selling off. So I think PBOC is mindful of that, and they don't want banks to take too much of risk.
So if there is a willingness to let the yuan weaken some more, where do you feel the floor is for the currency, and what are the implications for the carry trade?
I don't think so. There's a floor in this. We've seen a lot of carry trade unwind over the last couple of weeks, including the renminbi and yen. I don't think so there's a floor for that, but I think they want the currency to weaken slowly, because recently the export numbers have been weak. So I do believe that maybe because it was 7.3 before this carry trade unwind started happening. And I think now people is more confident as Fed is going to cut rates. Everybody believes that. So from that perspective, I think they may let it go slowly, maybe 7.3, 7.35. So I don't mind. I think PBOC doesn't mind the currency to weaken slowly and gradually over the next 3 to 4 months.
I want to get your view on some of the upheaval that we saw in Japan this week as well. I mean, we had upheaval in markets everywhere, but it was particularly pronounced in Japan. What's your assessment of how the BOJ handled everything this week, from the tightening to the comments on the future path of tightening afterwards?
I think everybody was expecting the tightening. I think it was more on the comments on the tightening where they were very hawkish, and market didn't expect that hawkishness coming from BOJ. So I think that took market by surprise. And I think on top of that, the US data came out very weak. And I think both of this combined together created this volatility. I don't think so it was only BOJ, because I think everybody was expecting BOJ to hike, but I think it was the hawkish comments talking about that the real yield is still very, very low. So from that perspective, I think market took that comment as a surprise. And then we had a weaker US data. So I think both of this combination created this volatility. But I think going forward, I expect yen to stabilize. And I do expect actually BOJ should hike at least one more time, because if you look at the inflation trajectory in Japan, it's on an upward trend. Labor market, actually labor costs are going higher. So I feel that I understand the volatility, but I think BOJ should continue to make sure that at least hike another 10 basis points over the next 6 months.
Yeah, we had some weak data out of the US early in the week, and then some pretty reasonable data in the past 24 hours. So I'm wondering if you think markets may have overreacted there, but also whether you think there's any reason for the Fed not to cut in September.
Okay, as of now, I think given what has happened in the US, and actually if you look at all the recent data, it has been weakening. Maybe it is not weakening as what market was expecting by the Friday's payroll number. But definitely, I think for me, only if the inflation really surprises on the upside. But I do expect Fed to cut 25 basis points. And if the data continues to weaken, then there's a chance they will cut 50 basis points. Because from beginning of year, our expectation was Fed will cut 25 basis points in September and 25 basis points in December. But given the recent bouts of data, there's a chance they may cut 50 basis points if data continues to weaken. Yes, we had one data, and yesterday the jobless claim. I think people are focusing too much on this short indicator, but we have to look at the continuing claims, or at least the weekly jobless claim is still on a weaker trajectory. We know that finally the labor market is slowing, inflation is also coming down. So from that perspective, I do expect Fed to cut at least 25 basis points coming this September.
Rachana, just quickly, what do you like in fixed income and credit around Asia at the moment? Where are you putting money to work?
Okay, basically, we were a slightly long duration when the 10-year Treasury went back to 4.3, 4.4. But now, given the level, I think it went as low as 3.85. So currently, we do believe the new range in 10-year Treasury is about 3.75 to 4.4. So currently, we're in the middle of the range. But if the data in the US continues to weaken, then we would like to go long duration. Mainly, we like IG credits, single A and double A credits. In terms of high yield, we continue to like the short-dated corporate credits in India and Indonesia. The reason for that is the supply has been limited in these countries, and I think they still offer good, attractive carry yield of about 7 to 8%. So we continue like short-dated high yield, and in IG bonds, we like high-quality single A, double A rather than investment grade.
All right, Rachana Mehta, we'll have to leave it there. Thanks for joining us. Rachana is co-head regional fixed income at Maybank Asset Management. Still to come, Nobel laureate Muhammad Yunus sworn in as the head of Bangladesh's interim government. We'll discuss the biggest challenges that he's facing next. This is Bloomberg.
Preparing for the company's future in a real-life succession story. Meet the family members he's hand-picked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive, premieres today only on Bloomberg.
An earthquake off the coast of Japan's southern island of Kyushu prompted the government to issue its first ever warning for a megaquake late Thursday. That's still in place. For more, let's bring in Tokyo Bureau Chief Isabel Reynolds. So, Isabel, Japan's always been prone to earthquakes. Why are they issuing this particular warning now, and does it necessarily foreshadow something big is on the way?
Right. Well, as you say, obviously earthquakes are a part of everyday life in Japan. Everybody's sort of aware of the risk, and most people are prepared for it. We do have already in place a system of warning for quakes that are just about to take place. So you'll often get a siren going off that will tell you to take shelter from a tremor that's coming within the next few seconds or minutes. But this is something different. This is something that refers to an area called the Nankai Trough, which is where two plates meet just off the southwest coast of Japan. And if a big quake occurs there, it could be truly devastating. So this is something that the government has been worried about for some time. They set up a panel a few years ago to keep an eye on the risk of something occurring in that area. And the quake off Kyushu last night is considered to have raised the risk of that quake actually occurring within the next few days or week or so. And that's why they've issued this warning this time.
So how have people been behaving in response to the warning?
Right, well, for most people, life has sort of gone on as usual, a little more nervously in some cases, I would say. There are some trains running more slowly than usual in the area around a potential quake area, which runs all the way from Tokyo down to the southwestern island of Kyushu, by the way. So it would affect potentially a huge area of Japan and of many of the most important industrial areas. And it could, in fact, cause a huge tsunami when it actually does come. But we have to bear in mind that this is something that happens every 100 or 150 years in theory. So we don't know if it's going to happen today or if it's going to happen very far away in the future. But one thing we do know is that headlines have just come in saying that Prime Minister Kishida is thinking of cancelling his scheduled trip to Central Asia this weekend, just to be on the safe side about the danger of this quake coming up.
All right, Tokyo Bureau Chief Isabel Reynolds there. Well, Nobel Prize-winning economist Muhammad Yunus has been sworn in as the chief advisor of Bangladesh's interim government. His initiation comes after student-led protests forced Prime Minister Sheikh Hasina to flee the country. Let's get the latest now with Bloomberg government reporter Sudhi Ranjan Sen. So, Sudhi, what are the key priorities for Yunus and the new government?
Well, the key priorities are, many and pressing, and most of them needs to be addressed yesterday. To begin with, it's restoring law and order in the country. We have seen weeks of violence, a trail of destruction in that country. And worse, most of the police force, the paramilitary force have deserted. So it's not only to get them back, but also to restore law and order. That's the first priority. The second priority, of course, is that Bangladesh's economy is really not doing. It's been further hit because of these protests and the curfews and the internet shutdowns. In fact, my colleague Arun, who is in Dhaka right now, yesterday in his report kind of pointed out that the foreign exchange reserves have dropped in the last few days. Although it's not alarming, we must mention that, but it has dropped. So yes, I mean, the main, so to say, the priorities would be law and order, getting the economy back on track. That would mean assuring investors, assuring business that, Bangladesh is back on track.
So in terms of progress towards diffusing the protests, the ongoing violence, I mean, addressing the underlying causes of this is going to take some time, right?
Yes, it is going to take some time. And in fact, what, Bangladesh watchers and people who handle that area, at least in India and other places, diplomats, are kind of, pointing to one interesting fact, which is that while Muhammad Yunus is a very well-known name within Bangladesh and across the world, he's run a bank, and running a country is completely different. And there are question marks, so to say, as to how well does he run a coalition. And the coalition that we saw, or the people we saw coming into the interim government, have all kinds of people. We've got central bank governors, which is a very good indicator, a good message to the market, so to say. We've also got student protesters out there. So how does he kind of forge a consensus and move ahead? And on top of this, we've seen the opposition, kind of pressing that the next elections must be held within the 90 days.
Yes, we've had a promise of fresh elections from the interim government. Is it going to happen within that 90-day period, or could it take a little bit longer to get organised?
Well, it looks like it's going to take a little longer to get organized. In fact, yesterday we spoke to the one of Bangladesh's former foreign secretary, who said that it's unlikely that the government will be able to hold the elections very quickly. And the primary reason for that he cited is that the government, the interim government right now, the caretaker government, will have to get a constitutional change done, and that is going to take time. So the apprehension or the understanding both in India and in Bangladesh seems to be that elections will not happen immediately. The last time we saw elections under an interim government, that took about 2 years. So that could be an indicator to what Bangladesh is looking at.
So Muhammad Yunus is well respected abroad. What is his appointment as the interim Prime Minister effectively going to mean for Bangladesh's relationship with its regional partners, particularly India? Well, you see, India and Bangladesh are not only neighbors, they share a border which is, it's over 4,000 kilometers. There is historical relationship, there is cultural ties. So whoever is in Bangladesh, even if the regime or the government is not so much friendly or so friendly with India, India and Bangladesh will both have to talk. There is no second way to it. How they negotiate the bumps is what one will need to look at. What Indian officials, Indian diplomats that I could speak to yesterday kind of indicated and said that we have, like everybody else, India is also waiting and watching on the moves that Bangladesh make. India's got a lot of business interests out there, both state-owned companies and private companies are there in business. That's one of the things that India is looking out for. What are the initial steps that government, the new government or the interim government takes? And that is, that is what will decide India's policy and how India engages, or what kind of engagement we see from India with Bangladesh. All right, Bloomberg government reporter Sudhi Ranjan Sen there. We have plenty more to come. This is Bloomberg. All right, let's take a look at how markets are tracking at the moment. It's been a pretty wild week, but overall, we do have global stocks down for a fourth consecutive week. We've got high duration cyclical stocks underperforming as well. Not a great week for industrial metals either. That's one of the subcomponents of the Bloomberg Commodities Index. So a lot of growth sectors been underperforming this week. And Japan in particular had a wild ride, but the key indexes are higher today. Got the Nikkei better by about 1.6%. Nikkei futures in positive territory as well, perhaps a function of the yen, which is weaker again. Here we go again, back to 147.35. We've got SoftBank performing pretty well also after taking a bit of a hit yesterday, but it has announced a substantial share buyback. Here's what's going on in China. Meanwhile, the CSI 300 better by 1/3%. The Hang Seng better by almost 2%. And we did, of course, get those CPI numbers out of China a little bit earlier, accelerating 0.5% in July. That was more than expected, but it does mask some ongoing consumer weakness in China. Now, investors are also going to be watching for the trading debut of Indian e-scooter firm Ola Electric. That's happening later on today. The SoftBank-backed firm's listing could help outspoken founder Bhavish Agarwal cement his position as one of the world's youngest billionaires. He's just 38 years old. Even a listing at the low end would add more than $1 billion to his wealth. That's it from Bloomberg Markets Asia. Coming up next, our exclusive coverage inside Adani wraps up with our special report.